This breakout is kind of looking shitty. Now, I don't want you to hate me, but I got to talk about something that nobody else is talking about because we got to be objective here. We got to eat the ginger, and that's what we do on this channel. So if you don't like hearing not up only stuff, then now's the best time to click away. If you like to hear the realities and the probabilities that come with trading, then make sure you watch till the end. But right now, I'm going to be honest with you guys. This breakout looks like shit, okay? Why does it look like shit? Well, to start, we're not that far off from the all-time high, but you can see in our macro range here that we've been talking about for 10 centuries now. We broke the high. Okay, cool, fine, great, right? Everyone is champagne bottles as per Crypto. We're going to 100K. You know, you only need 0.1 Bitcoin. Da-da-da-da-da. Long. Okay, there's an argument for it, sure. But kind of looking shitty right now. Why? For starters, the amount of time we spent in this range was like, I don't even know, 7 months, 8 months? A long-ass time, okay? A long-ass time. Why are we not pumping? Ooh, I lost my toothpick. Why are we not pumping out? Why are we not pumping aggressively out? Now, you could argue, yeah, it kind of looks aggressive, and we're gonna dive in here, okay? We're gonna dive in here for a second. But from the all-time high, we're only up 4%. Why? Why is it taking so long? What's stopping us here? Okay, you need to ask yourself this. Historically, when you have a big accumulation range, right, you kind of just get the hell out of there, right? Like, even this local range. Look at this little mini local range from February of this year, I guess. Yeah, even this little mini range, right? When you accumulate and you have truly no intention of coming back there, you get the hell out and you don't give anybody a chance to get in. Okay, you don't really give anybody a chance to get in when you have like a decent play like this. That is not what's happening here. First of all, this accumulation is so unbelievably long, and it gave the bulls so much time to get in. Okay, when you have a move, like I said, that typically takes you, upwards and onwards, when it's time to pop, it pops. It breaks the high. It gets the hell out of that area, and you're like, look at this fake out, for example. Okay, sorry for already flip-flopping. But you come down, you fake out to the down, and then you just pop out, right? Like you were accumulating, you were in this range, you had a little range, you faked out the low of the range, and then you just popped out. Like within, how long did this range take? Let's see how long this range took. Give or take, okay? Give or take. We're not going to be exact with it. Give or take. So 60 days, and then by the time you actually, we'll call it from even the low. By the time you popped out, it was 1 day, and then by the time you never came back, let's give it 1 week. Okay, we'll say on average 7 days. Okay, so it took a very short amount of time to get the hell out of that range, right? Why is that not happening now? Now, I don't care about the macro stuff. Who cares about the super macro stuff? By that logic, 120, 150K, maybe, right? I made a video on how we're going to trade, or how I trade all-time highs. And the answer was simply ranges. So let's talk about ranges, right? Forget about the super giga macro stuff. Let's just talk range theory for starters, okay? Forget the big stuff. Even locally, remember, this is your all-time high line, okay? Even locally, you're not really breaking. You're not really breaking anything. Why? You have a high, you have a low, you have a high, you have a low, you have a high, you have a low, you have another high. But what's actually happening? Well, let's get our measure tool and let's find out how far we're breaking. So from the first high to the second high, you have 1.5%. Lovely. From the second high from the second high to the third high, you have 0.64%. Not really lovely. From this third high to the fourth high now, you have 0.39%. So we're breaking, we're inching, right? We're teasing, we're edging. Get your mind out of the gutter. But we're not really doing anything. Why are we not popping off? And it's a little bit concerning, okay? It's a little bit concerning why we're not popping off here. So, what can we look at? Well, we have actually 3 ranges going on right now. We have this red range going on right here, okay? Now, we broke above that range. It was from this range high to this range low. Lovely, okay? This is standard range theory. When you deviate the high of the range, you have the opportunity to rotate to the low of the range. Wonderful, okay? So, with that logic, we can target here, this SFP, potentially. Now, again, all-time high SFPs, I mean, all-time high, you just got to trade the range. See how I'm not considering it all-time high? I'm trading it relative to this point and this point only. So I'm not really focused on the fact that it's an all-time high. This is my high that I'm relative to. You guys, I hope you get it. The second range we have is this range, right? Because you had the high of the range here. And then once again, you just deviated that second or this yellow range. So standard range deviation, you can target the low of the range. Well, the low of this range is not the same as the low of the other range. The low of this range takes you down here. What else do we have to go down here? Well, we have equal lows, do we not? So that's an easy first target. So you could enter hypothetically, and I'm not saying do it right now. I'm not saying we can't go higher. I'm just giving you the same data that we all have right now in real time together. But you could, theoretically, upon confirmation, which we're kind of getting, it's not great. It's all-time high type confirmation, so it's not wonderful, but we're kind of getting it. You could, theoretically, enter a short position. I'm not saying do it. It's not financial advice. I'm 5'2" 3/4. I'm a wannabe singer. Do not listen to me. I have no idea how to trade. I have no idea what I'm talking about. You could, theoretically, do something like this. Okay? You could, theoretically. I'm not saying do it. By the time you watch this video, by the time I upload it and edit it and whatever, things could be way different. So we're just talking range theory here. Okay? I'm not actually saying do it. And we have our third range right here. So we have a range high starting from here. We have a range high starting from here. And we have a range high starting from here. We have three ranges. We got the blue, we got the yellow, which we talked about, and we got the red, which we talked about. Now, the thing about this range deviation is we've kind of deviated all three. When you deviate three ranges in this fashion, when you get confirmation here, it is your target for that confirmation would be your red range low. Then, if you SFP the red range low, then you could come back up to the red range high and deviate again, right? Theoretically, that's how ranges work. So you have liquidity here, which we talked about. If you start closing below this red range low, well, what does your internal structure look like? I'm not going to go through the whole structure. It's actually not even internal structure. But what does your structure look like? It looks like low, looks like high, looks like low, looks like high, and then looks like break. Does it not? So now what that means is when you get a retracement like this, and you get a reconfirmation right there, you can short it down. Well, where would you short it down to? Let's pull up our second range. We have this yellow low, no? We have an order block here that we're watching, and we're going to try it along if they give us the confirmation, no? But the same thing that happened here, if that yellow range fails, and you get a break below, what are you going to get? It's going to break, and then you go, if you're lucky enough, and then you target down here, no? And then you do the same thing. If you break that, and then down you go, no? So we already have signs of weakness, considering after 7 months of accumulation, like in my opinion, we should be at 80, 85K, and we got to be there soon, in my opinion. Like, why are we not breaking? It didn't take 7 months of accumulation to just, break the high or take the high by 4%. Like, that's not good, guys. That's not good. It's not looking good right now. Okay? Now, let's pair that with the weekly candles. In the Nexus, shouts out to the Nexus, we are paying very close attention to this weekly candle for two reasons. Number one, this weekly candle that we had last week looked bearish as shit. And it got a lot of people very bearish, considering how bearish of a candle that looked. Now, hypothetically, if this candle were to close, this current candle that's big and white right now, if this candle were to close and it actually ended up being an SFP, where's my candle up? Candle up here. If that ended up being an SFP, right? Closes like this. You just SFP'd the all-time high, but you also SFP'd this candle, which was already bearish. Okay? So you're going to have an SFP that looks like this. You're going to have an SFP that looks like this. Okay? And in general, that's not the greatest break that you want to see. You know, you don't want to now, like, okay, relative to this candle, you need to not SFP this high. So 73.8 is a very important high. Obviously, the previous all-time high is a very important high. You get two SFPs like that, it's really not good, guys. Okay? And the second thing I want to talk about is market cipher. Now, market cipher on the weekly does look very bullish. I'm not going to sit here and deny that. It absolutely looks like it should already be way higher than it is. But why isn't it? Right? And you got to ask yourself. So I'm not saying be bearish. I'm not saying short it. I'm not saying we're going to 5K. No. I'm just saying, like, we should be breaking. And you should be breaking strong. And in my opinion, relative to the weekly time frame, this candle needs to close above the previous all-time high. Okay? It needs to, because if you SFP that, things get real bearish real quick. The weekly time frame on market cipher has looked good in the past and hasn't produced us anything. So, am I going to go based off of this? No. What can I go based off of? The daily? Absolutely. What do we know about market cipher? What's the number one rule? Whenever you have a red dot, you got to look to the left and say that the vectors can get recovered, right? Well, this green vector can get recovered because your next dot is going to be red no matter what. There's no such thing as two white dots in a row. All right, cool. Let's come to the 12. What is the 12 doing? Same thing. 12 is potentially setting us up for some divergences, no? 8 hour. You're already getting an 8 hour bear div, and it's an 8 hour spike wave bear div. Not the greatest look. 4 hour. 4 hour is giving us this pump with red money flow, guys. Red money flow. In other words, massive spike waves. Red money spike waves. Now, the 2 hour, arguably, yeah, looks good. I'm not going to sit here and say that it doesn't look good. But again, whenever you get a red dot, you got to look to the left and say that the vector can get recovered. So these can get recovered. And you're not just trading, at least me. Look at this on the 10-minute. Money's objectively coming out. Since we've put in this range, money is objectively coming out. Okay? We're not just trading with market cipher alone because you've had divergences this whole time. But you're taking into consideration everything that I teach. Well, I'm taking everything into consideration, everything that I teach, right? Which is the range theory, which is an add-on to yesterday's video or 2 days ago's video where I said, how do I trade all-time highs? I trade it based on ranges. So admittedly, I thought that this low, or this high rather, sorry, at 76 point whatever, was going to be a swing short down. I told the Nexus that this was going to be a swing short. They came up for one more time. I still think that we might have, there's no confirmation yet on it being a swing short. As we talked about with our ranges, we have potentially, like, we got to break some levels. You got to break this. You got to break this one to confirm potentially this one because you have an order block here. And then if you break this one, then we could start talking about coming down here, but you have an order block here, right? There's a lot to it. But I thought potentially this could have been your 1 tap. This could have been your 2 tap. This could have been your 3 tap distribution, rollover, down you go. Now, just because I thought it doesn't mean that we pulled the trigger on that idea. I did short from here yesterday. I did get some profit, and then I did get stopped out at break even. Fine. Why was this not your 1 tap, 2 tap, 3 tap? Because you never confirmed it with a structure break. So that was how we had the idea of the first range, because this is absolutely a range. The second range idea came from when I noticed that, hey, wait a minute, maybe this part is not actually considered as part of my range. Maybe this was your 1, this was your 2, and this is your 3. How do you confirm that? You have to break that low. Then your target is this, and then if you break this, you guys, we did that already, right? Go back. If you don't know what I'm talking about, go back and watch the video again. Because ranges are like, when you're talking ranges within ranges within ranges, yeah, it's a lot. It is definitely a lot. So I know this was kind of a technical video. I know it was kind of long, but this is exactly how I interpret the market. And this is exactly how I turn my scalp positions into swing positions. This is how you identify your order flow at your expectational order flow, which means wherever you think the market is going to go next, right? At some point, guys, at some point, this has to turn. It literally cannot go up only forever. Whether it continues higher from here, which it absolutely could. This whole range thing, I'm saying, why are we not blasting up to 85? And I want to see that happen by the end of this weekly candle close. We could just be at 82 tomorrow. And I'm not saying that we're not. But what I am saying is that right now there are currently a little bit like signs of caution. And I encourage you to, if you're trying to long, tread lightly and just I'm not like, I wouldn't say bearish, okay? Don't be bearish. I don't even like using the words bullish and bearish. It's weird to me. Like, we're humans, we're not animals. But I would say, if anything, just be cautiously optimistic. That's it. Just be cautiously optimistic. If you feel like you want to long, which there are ways to long all-time high for sure. Just consider like at least sweeping something local, right? Like longing here isn't great. At least sweep that. You know, just look at where there's a lot of stop losses and put your entries where people have their stop losses. You know what I'm saying? Like if you want to short it from here, don't short it here. Short it where there are stop losses. You understand what I'm saying? If you don't, let me know in the comments down below. Anyways, this was kind of a long video. Kind of a lot of TA, so I don't imagine that many of you followed completely, and I don't mean that in a condescending way, but if you didn't exactly follow along the range theory kind of stuff that we had going on, ranges within ranges, I encourage you to watch the video again. If this video helped you, let me know. But based on the market cipher, the divs, man, the 12-hour, like typically, oh, my voice just cracked a little bit. Did you guys hear that? Typically, it's not uncommon to retrace. So we already know you can come back and get these vectors, right? Whenever you see a dot, you got to look to the left and say that these can get recovered. Typically, it's not uncommon to retrace back into the golden pocket 786 area. So I am hoping that we can make our way down to 70.8. I'm hoping that we make it there, and I wouldn't be surprised if we don't. But I also do have lower targets as well. And these levels, guys, are the exact same as, like, it's the same thing that we talked about locally here with, if you break this, then it, you know, you can get a reaction, whatever. If you SFP it, then you go back to the high, whatever. This is the same thing, right? Whenever you have levels, if you get a reaction there, then take it, right? Like, it doesn't matter what you want or what you don't want. It matters what is. So if you get a reaction, why not try it? Whereas if you just fall right through it, why are you trying to catch a knife that's not going to work out for you? So it's quite simple. If you lose that, then you're probably going to come here, right? Why can you come here? Well, you have this liquidity. So if you lose this, you're probably looking down here. If you lose that, you're probably looking down here, right? Anyways, that's more macro stuff. I don't really care about that. I care about right now, and I care about the short that I took right now. So I am in a short position on Bitcoin. I am on a I'm 67% in profit, $200 in profit. I did get shaken out for half of my position, sadly. But, you know, whatever. It is what it is. If I can find the reconfirmations that I want to see, why not get back in? Which I absolutely will do. I absolutely will do. Once you identify the order flow expectation, where you know price is going to go, based on structure, based on range deviations, based on many things, liquidity, based on market cipher and vector candles, right? Then the game just becomes get the best risk reward you can, right? And I'll give you a quick example and then I'll let you go. Let's just say you start closing candles below here and then you get and then you get a reconfirmation. Well, then hell yeah, short that shit again. TP1 on that low. TP2 probably on this low to attack some of that liquidity. We have an order block here that we're watching, so TP3 maybe there, and then let the rest run, you know? Anyways, guys, very technical video, very long video. If you made it to the end, I appreciate it. If you didn't, you can't hear me anyways, but If I helped you, if you like the content, make sure to hit the like button. If you loved it, consider joining the Nexus down below. I keep you guys updated many, many times throughout the day. And that's it, guys. That's all she wrote. Enter the Nexus, control your narrative. I will see you guys in the next video. By the way, if you're looking to purchase Market Cipher, the link is in the description down below, along with the link to join the Nexus. Enter thenexus.com. Everybody, have an amazing weekend.